Okay guys, what is up? I'm back here to go over the recent meetings. So basically the outcomes of the back-to-back recent meetings in Capitol Hill and Washington, D.C. What happened there? They talked about how to handle this situation of blockchain and cryptocurrency, especially exchanges, delicately. And I think this is a good point because they never mention their effects on the markets. They don't want people to lose money, but then all these regulations coming at once and all this negative talk is crashing the markets or contributing to the market crash. So I like the fact that they said they should handle it delicately, as well as another many good points that were brought up in this meeting, positive points that I'm going to go over with you and share with the outcomes of this meeting with you. So again, they talked about success in blockchains used in food and shipping ledgers, even mentioning and looking into the quantum computer threat if or when it is a concern. So this meeting was with public industry leaders, so blockchain officials and regulators or government officials. So they actually, in this one, as opposed to the last SEC hearing, asked people that have lived, eaten, slept, and worked in blockchain and cryptocurrency to give their input, which is very good. So there's a lot of positivity that will come out of this in this video. I'm not the media, the mainstream media, so I'm not going to twist this and make it negative. I'm going to share what positives we can get out of this. Also talk about how the markets and investors should be who choose which projects have value and which ones don't, not the government or regulators, which is another key important point. So I'm glad that they're starting to get the picture and starting to see from our perspective, and this is the best way to do that, is have people from the industry come in, traders and things like that come in and speak and share their experience, because these people are regulators. They're only going to have a biased view on this. And they also talked about how blockchain and DTL, distributed ledger technology, can be used as a tool for government watchdogs and regulators, that they should be happy. And this is something that I've seen over and over again. Every time they try to say people are human trafficking, people are money laundering, people are committing crimes with Bitcoin or cryptocurrencies, actually is so far from the case. And this is a lousy excuse because of blockchain, distributed ledger technology, public ledgers that anyone can see what's going on. So it's actually more transparent than cash. Also, stay till the end, because we're going to share with you a letter explaining the new ABCA, American Bitcoin and Cryptocurrency Association, explaining that a little bit, what it means for you and how you can be involved. So we'll be right back with more. So the commodities, the CFTC Technology Advisor Committee hosted back-to-back panels on cryptocurrencies, blockchain, and regulations during its meeting on Wednesday. The meeting brought together influential figures from both the public and private sectors, with participants primarily raising issues related to markets, the regulation of new technologies, and the role of regulators in participating in the development of the technologies. Indeed, the event had one tangible outcome from the get-go. Just prior to the break, the committee approved the creation of 2 subcommittees, with one devoted to cryptocurrencies and the other on a broader application of distributed ledgers in the finance space. The event notably saw Brian Quinten's call for self-regulatory efforts around cryptocurrencies, a position he reportedly expressed during a pre-event press conference. He made a similar pitch at the Yahoo Finance All Markets Summit crypto conference in New York last week. So he reiterated this position during his opening remarks, telling attendees the CFTC should not attempt to make value judgments about which new products are worthwhile and which are not. The markets, investors, and consumers need to decide that for themselves. Busca later suggested that blockchain could be a potential tool for regulators, highlighting how market watchdogs would operate their own nodes on a distributed network and be fed information in real time. The evolution of DLT, which is distributed ledger technology, could allow regulators to access data seamlessly every time a trade is posted on a particular blockchain without the need for human intervention or intermediaries. Committee members from the private sector expressed mixed views on cryptocurrency and blockchain regulation and the extent to which regulators should involve themselves. Charlie Cooper, managing director of R3, appealed to regulators to boost their involvement in the blockchain and cryptocurrency industry, saying, "We would ask as passionately as possible for the U.S. regulators and members of the agencies of the government to become more active than you already are." I wonder if this guy has some motivation behind this, or if he was told to say this. Kind of seems a little bit like that to me. I can tell you that there are federal governments around the world that are way outpacing the U.S. government, and that's a concern. But the rest was all positive. Obviously, we can expect a couple negative things in there. On Wednesday, the U.S. Commodity Futures Trading Commission, or the CFTC Technical Advisory Committee, TAC, held a public meeting in its Washington, D.C. headquarters. During the meeting, members of the Bitcoin and crypto asset industry shared information regarding this emerging market and offered guidance on how the CFTC may approach regulating the space in 2018. Multiple participants in the public hearing made comments to differentiate between different types of crypto assets and their associated technologies. So I pulled these quotes from different, probably like 6 or 7 different articles out there. Not every article says everything. So we got everything, all the key points here together. In the face of these issues found on crypto assets exchanges, Gorlick hit on the large scale of the over-the-counter or OTC market. Representatives from LedgerX and CME also provided updates on the state of the Bitcoin futures market later in the public hearing. After gathering information from representatives on the crypto asset industry and asking questions, the TAC voted unanimously to recommend that the CFTC create a new subcommittee focused on virtual currencies. So guys, make sure you like this video, hit that bell underneath the subscribe button, and share this on social media if you know some people that could benefit from this information. Also, we're going to now look into a little bit of a couple sites I have open here in that letter that I mentioned in the beginning, with the ABCA. So, yes, I'm live. Sorry about that. move that to the side over here. So the Commodity Futures Trading Commission. What the hell? The U.S. Commodity Futures Trading Commission is an independent agency of the U.S. government. An independent agency of the U.S. government created in 1974 that regulates futures and options markets. Why it has to do with cryptocurrencies is because of ICOs. When people are giving you a token, something that they're saying will have either go up in value or go down in value in the future, or something that they're giving you, promising you in the future, this is a futures contract. So when you give Ethereum for an ICO and they say, okay, on this date we'll give you your tokens, or you can cash out in a month or so, that is a future in their eyes. That's how they can kind of twist that into being relevant to the Commodity Futures Trading Commission. So one thing that's very important is the government doesn't give a crap about losing your money. Okay, America is on its way to $30 trillion in debt by 2028. They want you to lose your money. It looks like, at least, with all the debt. The market cap of all cryptocurrencies is tiny compared to this debt. So we can't lose what they've already lost us. And the money that we're investing is our money that we've made. We've already made that money. They are $30 trillion in debt of money they do not have. So if anyone needs to be focusing on an issue or a problem, they should be focusing on this. So it's kind of a joke. You know, they're obviously, in my opinion, regulating cryptocurrencies because they don't want people to have the ability to profit. They don't want you to have power. They don't want the power taken away from them. And they don't want you to have a safe haven when their dollar crashes, which they're obviously trying to do. This has to do with cryptocurrencies because when they say that Bitcoin and cryptocurrencies are the reason, or throw Bitcoin and cryptocurrencies in the same pot as all these scams, right? Can't you get scammed for buying Bitcoin? Can't you? Well, can't you get scammed if you pay your taxes? Isn't the IRS a huge outlet for scams? Yes, it is. So this narrative of cryptocurrencies, being susceptible to scams, well, they should just take away the IRS too, because that's susceptible to scams too. So if you look on the U.S. Commodity Futures, this was a letter from the day before this meeting. So all these meetings took place on Valentine's Day, and that's why no one really focused on this. Everyone was talking about the last Securities Exchange Commission hearing. Nobody was talking about these recent meetings and how they, when they do a lot of these laws, pass a lot of these laws, create new organizations. They do it when people are distracted with other things, I've noticed. So let's look at this a little bit, and I'll share the link for this. But anyways, I'll just read it to you guys. It's a letter. At the top it says American Blockchain and Cryptocurrency Association. Thank you to the CFTC Technology Advisor Committee for holding this public meeting and for inviting written statements from interested parties. This is Commissioner Brian Quintens. So it goes on. There's a couple points here. ABCA supports thoughtful public engagement with federal regulators to inform the ongoing work of the CFTC and the SEC and others to resolve the question as to whether cryptocurrencies constitute actual currencies or securities. ABCA supports the need for consistent policy to the current landscape of state-by-state licensing of money transfer mechanisms. Opaque markets and uncertain exchanges discourage broader market participation, and the presence of exchanges creates vulnerabilities which sit atop blockchain, whose distributed nature aims to mitigate such threats. Examples: Silk Road, Mt. Gox, CoinCheck, etc. Now the CoinCheck victims are suing CoinCheck, if you didn't know. So cryptocurrency markets lack the tools which traditional markets have, e.g. collars, halts, 7% rule, etc., creating the potential to amplify volatility and market fragility. How can/will regulators frameworks introduce greater transparency to reverse the association with illicit finance? Will the public have a final decision on whether initial coin offerings or ICOs will be treated formally as initial public offerings or IPOs? What would the implication for further filings? What will the global regulatory environment look like, and how will it align across jurisdictions? So this is someone that's asking for information because, again, the ABCA is stating here that the American Blockchain and Cryptocurrency Association is a newly filed membership-driven non-for-profit trade association whose mission is to advance a vision for how distributed ledger technologies and cross-border innovations such as cryptocurrencies and blockchain technologies can lead to sounder markets. Membership is open to a broad universe of stakeholders, from individuals to coin investors, to exchanges, miners, enthusiasts, entrepreneurs, and even financial service firms. Guys, they're asking for your input. This is your chance to be involved in the regulatory process. For once, it's not too often that you get to be involved or your opinion matters. So I'd say we need to use this invitation, as well as corporations who are driving the blockchain evolution. To that end, ABCA engages with its broad stakeholder community through outreach, engagement, education, research, and advocacy work. So it was heartening to hear CFTC Chairman Giancarlo's testimony at February 6th. This was the past Senate hearing. 2018 Senate Banking Committee hearing entitled Virtual Currencies, the Oversight Role of the U.S. Securities and Exchange Commission and the U.S. Commodities Futures Trading Commission. The ABCA also supports sensible regulation to strengthen and smooth markets and provide stability to this promising new economic environment. So you can write letters to this agency, and your voice actually matters. So I would do that if I lived in the States. If you're either, like they said, a business, an exchange, an individual, coin investor, miner, entrepreneur, and even financial service firm. So that's about all for today, guys. We'll see you on our next video where we're going to go over all sorts of things that are happening and going on besides this political crap that I don't even like to get into much, but I thought I'd do you guys a favor and sum it up in a short video as I can. So, peace.